Hey, is this Jeremy from the Financial Education Channel? Hey, what's up, man? This is actually Olive from Olive's World of Stocks. Yeah, yeah. Oh, thanks, man. You didn't have to say that. Oh, no, your channel's better. No, your channel's better, man. No, your channel's better. Well, hey, man. Anyway, I was calling because I noticed that you uploaded a video the other day, and you mentioned that you were calling YouTube headquarters to report that you were going to be murdered in the comment section. Yeah, well, I noticed that you survived that, so I was wondering if you could just give me any advice on how I could survive as well. Why do I ask? Uh, no reason. What's up, everybody? My name is Ale and welcome to my world of stocks. Now, to be honest with you, I was debating whether I should make this video on Amazon stock because usually talking about Amazon just attracts a lot of attention, and sometimes it's very positive and sometimes it's very negative, and not just negative, but sometimes it's even kind of angry attention, especially if I make the claim that Amazon will reach a $2 trillion market cap within the next 5 years or so. Now, why is that so controversial? Well, to be honest, Amazon stock is a value investor's worst nightmare. I mean, they are sick of seeing Amazon stock continue to climb and perform so well at these ridiculously high prices. Now, I personally don't really consider myself to be much of a value investor. Instead, I think of myself as a little bit more of a growth investor, or even a little bit of a speculative investor as well, as bad as that sounds. But I have nothing against value investors. I think value investing is a very smart strategy and a very safe strategy in a market where stocks have climbed by so much in a relatively short amount of time. But I personally like stocks that have a little bit more growth potential, and I also like to invest in dividend growth stocks, but value investors also love dividend stocks and maybe even dividend growth stocks as well. So there's a little bit of overlapping there as well. But back to Amazon stock for a second. Now, when I first started this channel, I was making videos on Amazon and everybody was talking about Amazon reaching a $1,000 share price. And I was saying, look, forget $1,000. I think Amazon is going to hit $2,000 in the near future. And I would get all sorts of hate comments. I mean, I would get comments calling me an idiot, saying that I had no idea what I was talking about, people calling me a con artist, which, by the way, to be honest with you, I hate it when people call me a con artist because I'm not trying to sell anything. I'm not telling anybody to buy the stocks that I'm buying. I'm just sharing my opinion. In fact, I actually, to be honest with you, I hate it when people copy my strategy, because if people are buying the same stocks that I'm buying and those stocks go down, which it happens all the time, I'm not perfect, okay? Like, my stocks go down too. And if people are copying me and those stocks go down, who are they going to blame, right? They're going to obviously try to blame me. So I don't really like it when people copy me or things like that. I'm just sharing my opinion. Whatever anybody decides to do with that information is completely up to them. But when looking at Amazon, I was very bullish on Amazon from the beginning. And believe me, I'm not saying that to brag. I'm not saying, hey, I was talking about Amazon at $2,000 while everybody was talking about it at $1,000. I'm not saying that to brag. I'm just saying that now everybody's talking about Amazon at $1 trillion market cap, and I'm talking about a $2 trillion market cap, because that's just how bullish I am on Amazon stock. I just think that in the long run, they have so much potential. And so when looking out about 5 years or so, I really do believe that they can easily meet that $2 trillion market cap. Now, anything can happen in between. There can be a market crash, there can be several corrections, all kinds of things can happen, but how long they last and how deeply it affects a stock like Amazon, how long it takes to recover, and how much a stock like Amazon would recover, those are all variables that we can't accurately predict. So I'm not going to focus on all that. I'm just saying that in the long term, and for me in this case, long term would mean about 5 years or so, I'm expecting Amazon to really dominate. Okay, so you guys are probably thinking now, Ale, get to the damn point. Why are you so bullish on Amazon? Why do you think it's going to reach this valuation in the long term? Well, I'm going to give you all the reasons why, but I'm also going to give any bears or anybody who disagrees with me, I'm going to give them more fuel for their fire. Because look, I'm not delusional, I'm not blind. Amazon is trading at ridiculously high prices, and I'm going to give you all the reasons why they're trading at ridiculously high prices right now too. My point is that it doesn't really matter. And the reason why it doesn't matter is because Amazon has so much growth potential that investors will ignore the ridiculous valuation and they will continue to invest in Amazon because of their future dominance. So I'm going to explain all of that, but let's start by looking at Amazon's value right now and why it's overvalued. Oh, sorry, just one more thing. I know that some of you are probably wondering if I'm invested in Amazon and if I have any kind of personal bias or anything like that. So I do have a small position in Amazon. It's one of my smaller positions, but my girlfriend, which I've actually helped her set up her portfolio, her largest stock is Amazon. She is up an insane amount already on Amazon. She got in Amazon at very low prices. So she's well up like over 200%, and she is holding for the long term. Okay, but why is Amazon overvalued right now? Well, for starters, Amazon stock was up 35% in 2015, up 11% in 2016, 55% in 2017, and year to date, they're already up another 66% in 2018 and currently trade for around $1,950 per share. Now, if you look at their profile on simplywallstreet.com, you can see that their pie chart really has absolutely nothing going for value or dividends, and those are usually two of the most important things that value investors like to look at. But instead, everything is skewed in favor of their past, their current health, and their future potential. But digging a little deeper to see why exactly they're overvalued, we can see that future cash flow per share is about half of what they're currently trading for. Their PE ratio is over 150. That is insanely high, and it is much higher than the market at around 20 and the online retail industry at around 27. And then finally, their PEG ratio is also very high at 4.2, although I think that Simply Wall Street, I think they calculate the PEG ratio a little bit differently. They might look at maybe like 3 years of growth, while other websites tend to look at like 5 years of growth. So I've seen it much lower on other websites, but that's just a quick little disclaimer. Their PB ratio is over 28, while the market is at 2 and online retail is at 2.7. So yes, I think Amazon, it's fair to say that they are overvalued. But if you're a growth investor, then you're in luck, because Amazon has a 37% expected earnings growth rate and a 17% revenue growth rate, both of which are a little higher than the industry and more than double the broader market. Now, it's one thing to just talk about the numbers, but let's take a look at their business to see what we have exactly to look forward to. Now, in the past, Amazon has basically functioned as a company that focused more on growing revenue and didn't really worry so much about profit, because they were really reinvesting everything into their business to grow even further. And that's an interesting strategy that really helped them become the very dominant company that we know of today. In fact, if you look at this chart over here from businessinsider.com, you can see that Amazon's quarterly net income was either flat or somewhat volatile, but certainly never really trending upwards. That is until the last few quarters, where all of a sudden Amazon started to post much higher profits, particularly in their last 3 quarters, with the most recent one setting the company's record at over $2.5 billion, which is actually double what analysts expected and more than 10 times higher year over year. That is insane. And that's mostly thanks to their higher profit margin segments, like their cloud computing segment and their online advertising segment as well. But we'll talk more about those in just a second. Now, despite Amazon being the global leader in the e-commerce market, they still have a tremendous amount of room to grow. And people always say, well, Amazon is already so big, how can they continue to grow? Well, they can continue to grow because not everybody is shopping completely online yet. Yes, we're headed that way, and yes, that's growing every day, but we're not quite there yet. In fact, when looking at global retail sales, Amazon only accounts for around 10% of that. And then looking at US retail sales, again, Amazon is less than 10% of that. So there's plenty of room to grow, especially as more people switch to shopping online. And while Amazon's international segment continues to be the worst performing of the bunch, I see it as just another growth opportunity. In fact, if you look at some of these numbers, while Amazon is actually losing money in that segment, in this last quarter, they shrunk their net loss to $494 million, while the prior year's loss was much higher at $724 million. So they are definitely improving. And really the reason why their international segment continues to see a loss is because Amazon is still using their old strategy in the international segment of trying to grow out that business. So while their sales continue to grow, their costs are also growing as well. In fact, Amazon's CFO, their chief financial officer, he commented on this and said, "We're very bullish on international investment. We believe it's the right thing to do." So in the end, I think that this will just be another very smart and strategic move by Amazon to further grow out this part of their business. And then you look at what Amazon is doing with their Prime membership, and they continue to see amazing numbers there as well. Not only does Amazon destroy any competitors on Black Friday and Cyber Monday, which by the way, in 2017, they accounted for almost 30% of Black Friday sales in the US, while the next closest competitor was Best Buy at a measly 8%. And again, they accounted for 30% of Cyber Monday sales, while Target only got around 6%. But Amazon even has their own shopping day exclusively for Prime subscription members, known as Prime Day. And even though the site crashed on this year's Prime Day, which I should know about because I was trying to buy a bunch of stuff and the site just kept crashing and I wasn't really able to buy anything. But despite that, they were still able to bring in the most sales in history with over 100 million products sold, and it also had the most people sign up for a Prime membership than any other day in history. Now, all of this is good, but when looking at one of Amazon's most important parts of their business, it's their cloud computing segment with Amazon Web Services, which really is dominating the world when looking at cloud computing. In fact, they posted $6 billion in revenue last quarter, which was up almost 50%. So there's really no signs of slowing down there either. And I've read some reports that estimate their profit margins for their cloud computing segment at almost 30%. So those are very high profit margins in the cloud segment, which is Amazon's most profitable business, bringing in over 50% of their operating income. So if you're seeing amazing performance, really solid performance in your most profitable business, part of your business, then that's a really good thing. Now, as of right now, Amazon Web Services is predicted to bring in around $25 billion in the years to come in terms of yearly revenue. But one analyst at Jefferies is actually predicting that that number could climb to as high as $60 billion in about 5 years, which would mean even more tremendous growth to entice investors even more. And we should also talk about online advertising because that's a market that has been long dominated by Google and Facebook, but Amazon is really starting to compete there. In fact, in their last quarter, Amazon posted over a record $2 billion in advertising revenue, which was up 132% year over year. And that's really high margin sales, just adding to Amazon's profits. And I don't really see any reason why Amazon's online advertising would slow down. They have a tremendous amount of space to sell to advertisers. In fact, they have Amazon.com, Amazon Video, Twitch, even Amazon Music, and all of those different platforms will continue to grow as they bring in more Prime subscription members. And just focusing on Amazon.com for a second, we know that Amazon continues to rake in ad sales from third-party sellers who pay Amazon to promote their products. And we mentioned that Amazon only accounts for around 10% of global retail, but as that number continues to grow, more third-party sellers are going to want a piece of that action, and so ad rates are going to increase, and so that's just more ad revenue coming in for Amazon at very high margins. So you're really talking about a segment that is worth billions of dollars every single year at margins that are as high as 70% or more that will only grow out even further in the years to come. So in conclusion, I'm really left with a few different thoughts. Now, Apple was actually the first US company to reach the $1 trillion market cap. So a lot of value investors are comparing the two and they're saying, wait a minute, Amazon's PE is over 150 while Apple is at 20, and Amazon's PB is like 28 while Apple is at 10. But if you look at growth, Apple's trailing 12-month EPS rose 31% year over year, while Amazon destroys that number at almost 180%. So there's really no signs of slowing down. And if you look at future earnings growth, Apple is at less than 5%, while Amazon is getting close to 40%. So with margins that continue to improve as Amazon becomes more and more profitable, that really allows them to continue to reinvest in their business, especially internationally, and even expand into newer markets as well. You can't forget, this is a company that has acquired Whole Foods, and even more recently they acquired PillPack, which is an online pharmacy company that has tens of thousands of customers and rakes in over $100 million of revenue every year. And don't forget, in the US you're talking about hundreds of billions of dollars spent on medicine every single year, and PillPack delivers to all states except Hawaii, so it really is a big deal. And on a smaller scale, Amazon purchased Twitch in 2014, which is the world leader in video game streaming and has a very impressive 15 million daily active users. So as the gaming market continues to grow, which by the way is seeing tremendous growth, Amazon is in a great spot to really benefit from that. And on top of that, there are always rumors about which market Amazon will try to tap into next, which company Amazon will try to buy out next. In fact, some recent rumors are talking about Amazon getting into the theater market and maybe even buying out landmark theaters. So this is really a company that doesn't just wait around for opportunities, they go out and they take them. But anyway, I know that some of you will agree with me and some of you may never watch my videos again. But if you found this video entertaining, even if you disagree with me, then please do me a favor, hit the like button, support the channel. And you know what, honestly, who cares what I think? This is just my opinion. It really matters what you guys think. Make sure you leave me a comment down below. Let me know how you feel about all this. And I will catch you guys in the next video. Have a wonderful, beautiful day and take care. Bye-bye.